Hi, I'm Lenata Wenzel. Question 4 that we're dealing with now consists of 3 parts. The first part is dealing with the calculation of the provisional tax payments. We're first going to deal with that now. But what is that now? Why do we have to calculate that? If you do the taxable income calculation and you come to the tax payable amount, this tax now needs to be paid over to SARS. But they don't really want to wait until the end of the year to get the money. They want to have prepaid taxes throughout the year so that they can have some of the money in the middle of the year and then the rest, that is the actual amount, at the end of the year. So this is a type of a prepaid tax which we need to calculate 6 months into the beginning of the current year and then at the end of the current year. That would be your second payment then. The first one is 6 months in and the second one at the end of the year. Sometimes there's a third payment which is 6 months after the year if there's still tax outstanding after you have been assessed. So let's look at the required part first and then we'll look at the information and the approach to this type of question. So when we look at what we need to do for part A, what is the required part, they ask us to calculate the first provisional payment of the company and also the second provisional payment of the company. So let's look first at the first provisional payment. There's several rules that you need to take note of before you do the calculation. We'll go through the total thinking process and the calculation just now, but it's based on the basic amount. And the basic amount is your last year of assessment that you have received an assessment for. So if you are busy doing the 2050 year of assessment and you have received the 2049 year of assessment, you will use that assessment amount as your basic amount. And if you haven't received that one yet, you will use the previous one, the 2048 one. So that's the basic amount, is the amount that you're going to use to calculate your taxable income, which you're going to calculate the provisional tax on. Then, after you've determined the previous year of assessment amount that you're going to use, then you have to consider 2 things, the 14-day rule and the 18 months rule. Firstly, the 14-day rule says that if the previous year of assessment was received, if the assessment of the previous year of assessment was received within 14 days before this first provisional payment is due, then you can't use it. So if it's received 10 days previously before the due date is for the provisional payment, you are not allowed to use that provisional, that assessment amount. You have to use the one before that. But we'll look at it in the question. The second one is the 18 months rule. After you've now determined which one you're going to use, and it's an older one than the previous year of assessment, then you might have to adjust this amount with 8%. Because it's now an older amount, obviously the amount is much less than it would be a few years later. And that's why we will have to adjust with an 8% increase in the amount. So let's look at the information that's given here and we apply those rules when we do the calculation. The information tells us about the company, what they do, and that they are in South Africa. The year end is February 2050. And they are not a small business corporation. Then all of this information is given. When the year of assessment was received, the assessment, the notice of assessment was received, and the amount as well. Now I'm going to plot this on my timeline so that I can easily see the information that is given to me. So the first one is the 2047 year of assessment. I received it on 7 July. And the amount is 2.9. So I've plotted it there on my timeline, and this is for 2047. The second line tells me about the 2048 assessment, which I received on 19 August 2049, and the amount. You can also do this timeline for you in the exam just to put it all on one page. The 2049 assessment was received on 25 November and I've plotted the amount. Then for 2050, I have not received an assessment yet, but they have estimated that the amount would be just over 4.1 million. So at year end, that is my estimate of the taxable income. Now, if I look at my timeline again, my current year of assessment ends on 28 February 2050, and it starts at the end of the previous year of assessment, and it runs for that period. So this is my current year that I'm working with. Now, the first rule says that I want to determine the amount that I'm going to base it on, the basic amount. The first provisional payment is due 6 months into the year, and that is on 31 August, so this is my first payment, and obviously the second payment will be there. So when I want to do my first payment, I look at my previous year of assessment that I've received an assessment for. So it's my 2048. So I would like to use that amount, but now first we have to consider whether the 14-day rule apply. So I look at this portion here, whether that is more or less than 14 days. And if you look at 19 August up to 31 August, it's clear that it's less than 14 days. In other words, we received the assessment within 14 days before the payment is due. And that is then why we would not be able to use the 2048 assessment amount, because it's received too recently. So then we use the previous assessment amount, which is the 2047 assessment. And then, for instance, I'm going to, in my answer for now, already include that amount. When I do my first provisional payment, I use my basic amount, which I have now determined to be the amount in the 2047 assessment. So I will include that in my calculation. Now the second rule that we need to look at is the 18 months rule. In other words, I will have to look whether this date of the year of assessment, and I want to correct myself, it's not the date that the assessment was received, it is the date of the end of the year of assessment. So I'm working with 2047. February 2047 is my year of assessment, the end of the year of assessment that I'm working with. So from this date up to the date that the assessment is due, I will need to determine whether this period now is more than 18 months. And if it is, then I will have to increase the amount. So let's look at the years of assessment. February 47, and there I have February 48, so there's already 1 year. It's 12 months. And then from 48 to 49, there's another 12 months. And then from February 49 to August 49, that is another 6 months. So in total, I have 30 months between the end of the year of assessment that I'm going to use in my assessment up to the due date. So obviously this is more than 18 months. And this means that I will have to increase my assessment amount. This whole process that I have gone through in my thoughts now in this timeline, you need to convey in your answer to us. You can't merely just use an amount and go and adjust for 8%. You will have to show why you will increase by 8%. So in your answer, you will show that you can't use the 2048 assessment because it was received within 14 days. That's why we will use the 2047 assessment, which we've indicated there. Now, you will say that we will increase by 8% because it was more than 18 months. And then you get to your calculation. So the calculation is the basic amount, which we've indicated there, times 8%. So it has to be increased, but for how many years? If we look at the timeline, it's for 1 year, 2 years, and a third year because it's part of our current year. So we will multiply by 3 years. And this then will give us the adjustment that we need to add of just over 700,000, which brings me to my taxable income for my first provisional payment calculation. So now I have an amount that I can calculate my first provisional payment on. This I will multiply by 28% to get to the tax payable. And this is not the amount that I will pay. Because I'm only halfway through the year, this is my first payment, I will only pay half of the amount now. And that's why I will multiply by 50%. Before we go on to the second provisional payment, I just want to take a turn, and let's say that this assessment, the 2048 assessment, was received on an earlier date. Let's say it was received on the 19th of July 49. So then you will see that between this date that it was received and the due date, this is now more than 14 days. So this means that I can use the 2048 assessment. So then in this case, I will include the 2048 assessment at just over 3.2 million in my answer there. And now I have to determine the 18 months rule. So I'm going to indicate the end of the year of assessment for my 2048 year, which is February 2048. And then this period from there up to the date that the payment is due, I need to determine whether this is more or less than 18 months. So from February 48 up to February 49 is 12 months. Then from February 49 up to August 49 is 6 months. So this is exactly 18 months. It's not more than 18 months. So for this specific scenario, I will actually not increase by 8% because it's not more than 18 months. So in a scenario like this, I will purely use the assessment amount for the 2048 year and then multiply by 28% and then by 50%. I will not increase the 8%, the amount by 8%. So now let's look at the second provisional payment. This is now based on separate rules, different rules from the first provisional payment, but it is determined by whether the company usually has a taxable income of more or less than 1 million rand. If it is less than 1 million rand, you take the lower amount of the following two, the basic amount, and here again you will take into account the 14-day and the 18 months rule, or the estimated amount, which is seriously calculated. So this means it's your taxable income for the full year of assessment, which you have now gone and calculated based on the physical amounts that you have in your accounts. So this is for less than 1 million rand. If it is more than 1 million rand, then the company has to base the second provisional payment on the estimated amount, on the calculated amount. Now, if you look at our company, the taxable income is clearly more than 1 million throughout the years. So in this case, we will use the actual estimated amount because it is more than 1 million. So in my answer, I merely include the estimated taxable income. So I don't need to go and calculate the basic amount because we are more than 1 million. I multiply by the 28%. And now, this is my tax that I need to pay based on the actual estimated amount. But now, already I have paid some tax during the year. I've paid my first provisional payment 6 months into the year. So I have to remember to take that off. Otherwise, I will be paying double again. So that's why I will take this first provisional payment that I've calculated there, and I will deduct it here to get to the actual amount that I need to pay for my second provisional payment. And that is the second provisional payment. So it's easy like that. It's basically determining the amount again. Remember to deduct the first provisional payment and any other taxes that you have paid, and that will bring you to your second provisional payment. Now the third provisional payment, if you are required to do a payment like that, because you've paid too little tax throughout the year, that is based on the actual assessed amount, the actual assessed tax, and then you take off your first provisional payment and you take off the second provisional payment, and with what you are left there would be payable to tax then, to SARS then. That's the tax that you need to pay still. So that's the provisional tax payments. Remember that you have to consider the rules, the 14-day rule and the 18 months rule, and use a timeline to make sense of it for yourself. I always use a timeline because it's very confusing. But as soon as you can see the dates and consider the number of months, then it makes it much easier. If we look at part B now of the question, it's a discussion question. The first word in the required portion says discuss. Now this means that you will not calculate. You will actually give your answer in sentences. So you will have to plan your answer, not only write down the first thought that comes into your mind, and then you must also write clearly. Give us a format in your question of where you are going to, how your thought processes runs to get to the answer, and also please write neatly so that we can read your sentences and give you marks where where we need to give you some marks. Now, the discussion question can be several theory type of questions. So you have to go and learn it in order to portray the information to us. In this question, we are asking for whether a deduction is, whether a payment will be deductible according to the general deduction formula. You can also be asked to discuss whether an amount is taxable according to the gross income definition, or whether a transaction is capital or revenue in nature. We can also ask small type of questions, like in part C, where you need to list or discuss the processes that you will follow or the things that you will consider. So clearly there is small questions that we can ask on the theory that you need to go and study and then portray to us in a question where you need to write it down. If we look at this question now, part B of the question. Firstly, the required says discuss, and that's what I've now said. We will only write sentences with reference to case law, and I will get back to this fact just now. We need to discuss whether the payment will be deductible according to the general deduction formula. So firstly, if I think about the general deduction formula, there are requirements that I need to consider. And the requirements is very important in a question like this. You need to list them and then discuss them according to the facts that are given in the question. If you have the gross income definition, then you will have different terms that you will use there. But it's important to list the requirements and then apply them according to the facts that is given in the question. This you will also see from the number of marks which is provided. 12 is quite a bit for a discussion question, but some of the marks are given for the requirements listed in here, and some of it is given for the application. So talking about application, the facts is given in the question about what happened and what the company is about and when it happened and everything that you need to know to apply the specific requirements. But you need to apply the facts to the question. It's not merely enough to list the requirements and then come to a conclusion based on what you thought in your head. You have to apply the requirements and show which requirements are met according to the facts and which are not, and then come to a conclusion. And it's also not worthwhile just to write over the facts in a paragraph. You have to apply them to the right requirement. Otherwise, we can't give you any marks for just duplicating the information. Okay, so let's get back to the case law that I've mentioned. When we say with reference to case law, this means that you have to apply the case law in your argument to strengthen your argument. This does not mean you have to mention a case law for each application in the requirements. This comes into play when you are debating whether this requirement is met or is not met. So somewhere in the question there would be a fact which you need to really think about to apply whether it is met or not met. So in that situation you will apply the case law applicable to that required. So please don't include a case law with each one. Go and see where it's necessary to strengthen your argument. If we look at our solution, we see that the company incurred some expenses because John Best gave a claim to them to pay because he incurred some damages. So the claim was settled out of court on 1 January 2050. So this is in my current year of assessment. Then they settled the claim. In other words, the company said that they will pay this amount to John Best. They don't need to go to court. They will pay an amount to John Best, and that was fixed. So there's an unconditional liability for the company to pay the amount. Now you'll see in the question that they only paid the amount after year end on 10 March 2050. So this is now the debatable point. Was it now incurred or was it not incurred? Because it was paid only after year end. And that is why you will debate this amount in your requirement, where you give the information and then say, because it was incurred before year end, because there is an unconditional liability, that is why the amount is payable, even though it was paid after year end. So this is an example of how you will think about the debatable part and then include a court case. I'm not going to go through all the detail of the information. You have it in front of you, and you merely apply the information in the question to each requirement. And then you come to a conclusion. Right at the end, you write whether the amount is deductible or not. It's a good idea to show us that the requirements were all met, or that some requirements were not met, and that is why it will not be deductible. In this case, all the requirements were met, and that is why it will be deductible. If your argument is different from our answer, then you might lose marks in the question itself, but your conclusion needs to tie up with your argument, and if that happens, you will still get a mark for the conclusion based on the facts that you have discussed. So that's why it's important to have a structure in your question, to have your thought processes clear, and then to write it down in a clear format so that we can see what you think about in this question. I'm not going to look at part C specifically. This is merely theory that you need to write down and which you obviously had to learn. But it says discuss. Again, you're going to write down sentences and mention the specific things that you need to consider in that situation. So this concludes the DVD. We wanted to show you how we would approach exam type questions, and that it clearly gives you an idea of what to look at first, what to spend some time on, what to look out for. And like we said, first look at the requirements, first see what you need to do. And then you go and read the question, make notes for yourself, specifically if you need to get back to it, and then include it later on in your question. And then clear calculations. Don't cram everything into a small line. Write down the calculations as you need to calculate it in the body of the question, not at the end. And then come to your answer and go on to the next question. Don't spend too much time on one question, otherwise you won't finish the exam paper. I hope this has helped you. What you need to do now is to go and learn. You need to use your study guide and your textbook. This DVD is not a replacement for studying. This is merely where we show you how to apply in the exam situation. So go and learn all the rules that you need to know, all the rates and the dates, and then you will be ready for the exam. We wish you luck.